how do you change the way that you trade for heightened volatility?
Best thing is just shifting from swing trading. Those scalpers can generate a huge amount of money. And you know what I'm doing? It's a personal strategy. Actually, I'm talking about it here. I like volatility because I'm a scalper and I'm a day trader. But usually for investors, it's a headache. It's a pure headache because it will increase uncertainty. And when it comes to uncertainty, most of them are crying usually.
Yeah. We're talking today about stormy markets, choppy conditions, volatile markets. So I think at first we should talk to the audience a little bit about the volatility that we've seen, the heightened volatility, and what the reasons are for that, just briefly. I know probably the audience have heard a lot about tariffs and Trump and stuff today, so we'll keep it down to a couple of minutes. But tell me a little bit about the volatility this year.
Greeting everyone, Amir Amidian here. So regarding the volatility which Connor mentioned, so we are facing a very high volatility actually from the beginning of 2025. Actually, it started from 2024 at the end, I think November or December when we had the US election. So I don't think so if it's gonna stop. So 2025 is gonna be very volatile because Donald Trump again returned to the White House. You told me don't mention, but I have to talk about it. Yeah. Again, he's returning the tariffs as already got accelerated, again deaccelerated. So there's a huge doubt between the financial market participants. If you look at the bond auction in the US market, so you can see in the last month, the participation rate of the investors was very low. It was quite low. Now, again, we can see some return for the investors that the sentiment is getting a little bit better and better. But totally, if we track the economy, we have only two phases in the economy. So we have expansion and contraction. So we cannot say U.S. economy is exactly in the expansion phase, and we cannot say even is in the contraction phase. It's at the middle. It's in the long-term growth.
Yeah,
that's what I'm looking.
And also, you've obviously got, which you probably heard today, is about the reversals of the tariffs, or at least the tariffs being cut down somewhat. And I think what we've seen in the VIX, for example, which obviously is a tracker of the volatility, is a big spike higher in the VIX, but also a big drop as well. So I'm interested to know, so we can give some tips to any traders in the audience, is how do you change the way that you trade? I'll answer this as well. How do you change the way that you trade for heightened volatility? So when markets are more volatile, is there anything that you do to try and protect yourself more?
Actually, I'm going to answer on this question with the style of trading. Whenever financial markets are going to be volatile, so the best thing is just shifting from swing trading to the day trading. So why? Because at the end of the day, you are pretty sure that, okay, all of my trades are closed. There is no awareness for the upcoming hours because there is a huge time difference between here and the US. So whenever we are going to sleep, it's going to be something like afternoon of the US, and we are going to get so many tweets from Donald Trump, from the White House, and so on. So the best thing I'm doing is shifting from swing trading to day trading. At the end of the day, at least I can say the drawdown will be limited. And that's the most important thing as a trader, even if you are going to be fund manager or managing your own fund. So the most important thing is drawdown, Yeah.
Well, me personally, I'm more of a swing trader. So I'd hold a trade for, let's say, 1 or 2 weeks. Let's say I'd hold a trade for, but at least over a couple of days. And one of the things that I've done over the past sort of, let's say, 2 or 3 months with the volatility is I never hold my trade over the weekend. Obviously, we've seen like the news that comes out in times like this. We've seen what happens, with the news over the weekend, and you get those big gaps from Friday's close to Monday's open. And I've been burnt a couple of times doing that, actually holding trades into Monday. Obviously, the broker takes the stop loss from where the gap was if you've gone the wrong direction. So that would be one piece of advice from me personally. And also, I have a risk management plan whilst I'm in the trade. So for me personally, what I do is when I get to a one-to-one risk reward, normally I would sort of take half of the position off, and at 2-to-1 risk reward, I'd look to move my stop loss to entry. That would be in sort of normal market conditions. But in times of extra volatility, I move my stop loss sooner. So I move my stop loss at say 1-to-1 rather than at 2-to-1, just to really protect myself and protect my capital a little bit more in times of higher volatility. Because I believe that in times of higher volatility, a lot of the time it's about surviving, right? So you'll probably have 2 or 3 months in the year where you make the majority of your money as a trader. This is how I see it. And the other 7 or 8 months, you're sort of chopping, the markets are consolidating, you're getting chopped in and out, you're -1%, you're +1, -2. If you can survive those times, for me, in those volatile times, that's when you can, thrive as a trader. That would be my opinion.
That is true, but actually, I have also another point of
Yeah,
view, which is in the volatile time, those scalpers can generate a huge amount of money by tracking news terminals like Bloomberg, Financial Juice, like CNN or CNN Money or the other platforms. So by tracking this news, actually, you can access to the latest news. And you know what I'm doing? It's a personal strategy. Actually, I'm talking about it here. I just following Donald Trump on the Twitter and I'm putting on the notification on. So whenever he's tweeting, so it appears on my Mac.
Yeah.
So I'm getting the latest tweet. And at the same time, these news terminals, you can modify it to your setting. And you can, for example, even click on Donald Trump tweets. It will appear on that news terminal. So through these techniques, actually, I like volatility because I'm a scalper and I'm a day trader. But usually for investors, it's a headache. It's a pure headache because it will increase uncertainty. And when it comes to uncertainty, most of them are crying usually.
Yeah, definitely. Right. Okay. So, as a little bit of fun for the audience, so before we actually came onto the stage today, there was a few people around the event, and also some of our social media followers have given us some questions to answer. Now,
Okay.
I have just seen these questions like 2 seconds before I came on the stage, but Amir hasn't seen them at all. So we're going to get a real honest answer from you on these questions, okay? Let me just quickly get them. Right, here we go. So I've got here 5 questions. We've got 6 minutes, so we should be able to get through them. So the first question is, if you could only place one more trade in 2025, what would it be?
Only one trade.
Only one.
Okay. Actually, it's a weird question, to be honest. But I prefer to be on the buy side of the cryptocurrency. I prefer to have a long on BTC. Yes.
Why? Why is that?
The reason you mean?
Yeah.
The reason is because of the market cycle, because I'm tracking the market cycle of crypto. And I prefer to be on the crypto, not on the bond. No, no, no. This year is not the year of the bond or stock market. No. Although I'm index trader. But I prefer to be on BTC this year.
Okay. So I'll answer that as well. So for me, I would probably be on the long side of the dollar. What pair, I'm not too sure. So I'd have to look at the technicals, which I haven't got access to. But from a fundamental standpoint, for me, I think what we saw with the Trump tariffs is obviously there was a credibility issue in the US when tariffs were announced, or we know all about it. And the fact that he's reversed them, I think it's opened up an opportunity, I say over the next few months, but let's say for the rest of the year, that we might see an unwinding of those dollar shorts. Should there continue to be negotiations around trade? Should there continue to be peace deal negotiations with the wars that are going on? And I think that opens up an opportunity, bearing in mind we traded below 100 on the DXY, which is historically a very good support level. I think there's a good opportunity this year to go long on the dollar.
Agreed.
Yeah? Okay. Question number 2. So we've got 4 minutes. Right, let's go. So what's more dangerous to a trader? A good trade, like good technical analysis trade with bad risk management, or a bad trade technically, but with good risk management?
I think actually a good trade without risk management is very dangerous.
Yeah.
Yeah, I prefer to be on the second part, because when it comes to risk management, it's the most crucial factor. And if you don't have enough, if you don't have enough knowledge or control on the risk management, you cannot control the drawdown. So just an example, if an account is going to drop 50%, you have to gain 100%. So it's not an easy game, right? It's not an easy deal. But when it comes to 5%, 7%, it's very easy to return. So I prefer to be on that part.
Yeah, well, I would agree with that, of course. A lot of the time, like when I've coached traders of all abilities, that they come to me and they say, "I kind of like, I'm losing money. I've blown my account." And I'll tell you now, 95% of the time, they blame their strategy for it, and they hop between smart money concepts because someone on Instagram told them to do it, or they go onto indicators or chart patterns, and pretty much every time the reason that they're actually losing money is themselves and their risk management rather than what their strategy is. I've seen people that make a lot of money trading with basically just using naked charts and swing trading and using a pin bar candle, and that's it. But their risk management's on point. So I'd always pick the risk management trade personally. Okay. We've got 2.5 minutes. We've got 2 questions. Right, let's go. So what is your biggest trading mistake? A mistake that you made in trading?
Mistake.
The biggest.
The biggest mistake, I forgot to close my trade. It was on a prop account. It was 200K funded. Actually, I thought that I closed all the trades, but unfortunately or fortunately, I had different accounts from different companies at the same time, and I forgot to open the other MetaTrader to close it, and it was my biggest mistake.
Yeah.
And I lost the account.
Okay. Mine was when I was at university. You have like a year in industry, so you do some work experience. Nothing to do with trading. I was just interested. I was doing economics as my degree, so I was interested in trading. I was sitting there in my year in industry, and I was on MetaTrader on my phone. My manager's sitting to the right of me, and I've got my phone down here on MetaTrader. Probably a lot of us have done this, and it's actually not funny, to be fair, because a lot of people probably have had this situation.
It was painful.
I didn't understand what lot size was, and I didn't understand that lot size changed the value per point or per pip, depending on if you was like on the stock market or if you was on Forex. So I'm on the German stock index like this, manager's there, and I just pressed buy, and I had £2,000 in the account, which was like everything I had in my savings when I was like 19. And I lost that 2,000, I'm not joking, in probably 7 seconds, 8 seconds. Like the price barely moved, and I lost. And like the feeling that gave me was just horrific. So that was that was a bad one. That was a bad one. But then I learned from that, so that's the main thing. Okay, final question. We got a minute left. If you could ban one trading habit forever, what would it be?
I think I will ban. I don't want to say over trading or something like this. No, I will ban all the trades which are not matching and following the trade plan. That's the best one.
Yeah.
Because when it comes to over trading, it means you are not following your trade plan. When it comes to over risking, it means you are not following your trade plan. When it comes to other things, 40 seconds. I just answer.
I would say FOMO trading. So like obviously when you've seen a move happen, you saw the dollar sink because Trump tariffs, and then like you don't get into that move and you're desperate to get in, or like you were desperate to get in gold longs. That's like the most damaging trade, I think, when you're trying to get in on the move, but you're just too late. A lot of retail traders are just always too late. So that would be mine.